It has been another volatile, incredible day in the markets, and I would love to talk about it and tell you how I've been playing it. I am Dr. Stock, Doctor of Education, and if you want music that really brings it all together, it's probably played by a rubber band. All right, we're going to cover the SPY, and we're also going to cover QQQ. We'll give an update on the 3 stocks that I talked about this morning and about the different positions that I took, and one of them that I capitalized on quite well, all in this video. And I'll also tell you about your free stocks from Moomoo. I'll tell you about my Patreon, where I post my buys and sells through the Discord that's over there, and the options course that I'm building out. In the meantime, though, as usual, we got to get right to those charts. So let me bring that down, bring that up. There we go. We got the SPY on your screen right now. Here's the daily chart that we're looking at. In magenta across your screen, this horizontal line, that is that magic number 430 that I had talked about. Not only was it a magic number to break down through in terms of seeing further decline, but now that we're below it, now it's a magic number for resistance to the upside. And then from there, we also have 434, 438, and that ultimate level of retest resistance for this thing, in my opinion, is 442, which we want to be watching for and talking about. So that's the SPY. I'm going to move over to the Qs because that's where I did some of the magic today. So let me put QQQ up there for you. And I said that today is the day where we could see that bounce back up following that candle that we had yesterday. And then we started to see the turnaround. I thought maybe we bounced. We did, but not at the beginning of the day. Not when I got stopped out on my call options for just a really tiny loss on that one. I guess I played it too tight. Had I been sticking around for today, that would have paid off handsomely. Now, I do have a hedged position for tomorrow. We'll see what we get. It could be, and I should also mention PCE comes out tomorrow, so hopefully inflation is favorable and is something that helps to boost the markets, give it a further push upward. And it might not be the thing that totally turns the market around, but it could be something that puts upward pressure on the markets. So we'll pull up trading economics too, just as a little bonus, and we'll give a little bit of commentary from today, and also looking forward to tomorrow for personal income and outlays. So we got the bounce in the SPY, we got the bounce in the Qs, and let's drop down there to intraday, because that's where things really get interesting. So here, intraday, let me zoom out on this. And these blue lines you see on here, this is from a live stream that I did with Stock Moe starting at 1 p.m. today. And that was incredible. So Mo did a live day trade on that. And we were both giving commentary, the technical analysis as we were talking through and what exactly we would see from it. And it was around, let me see what time we're at. Yeah, it was around the 2 o'clock hour that we watched this play out. And he got in somewhere back around in here in this area. And you could go watch his live stream. I'll put that link down in the description of this video if you want to see it, where he went and he played this out. And then we happened to later on, actually, he ran it out all the way until I think it was this candle right here that I have at 2:18 p.m. And then he stepped out of that long position that he used. Like I said, see the details in the description for that live stream that we did together. And what I talked about in this area in here was that we started to see just a little bit of bearish divergence because the prices were drifting up slowly while the RSI was dropping down slowly, and it was possible that we see the drop. Well, then this candle happens right here, and as it was forming, now this line of resistance that I had drawn ahead of time in that video, you can see we went up, we touched just a little peekaboo over the top of that thing before selling off, going back down through. And what I remarked on that when you watch the video, you'll see me put up words with an arrow with a little thingy pointing to it, and it says low volume. That yes, we had to push up on this, but it didn't really have convincing volume that it was going to be the thing that pushed us up through resistance, and we broke back down from that. And you can see what happens as we get rejected, and then finally that drop happens that you see there. So some of the metrics that we were using when we're talking about, let's take down the moving averages. Let's put up the exponential moving averages and the color coding thanks to Stock Moe that we have on here, like a traffic light. So we have red, green, and yellow for this. I almost said red, green, blue. Red, green, yellow going on here. And you can see this moment right here where we had the cross. This is that moment where you might want to consider entering. Certainly by here, and then by here, you're definitely in this thing as we get that cross. If not there, then this is the candle where it really starts to precipitate. So you got told it's about time. Oh, hey guys, it's really moving in there. And then here finally is that candle where it's like, okay, well, we have the faster moving average going down over the slower moving average. It's like it's going to fall off a little bit more from here. We have the declining RSI to go along with it. And then afterwards, you can see what precipitates. And then we get warned on this candle as we get warned back here because we're at 30 on the RSI that we could probably sort of maybe consider taking some of the profits off the table from that decline if you're playing this short. And then on the next one, you get warned again that, hey, you know, things are really starting to look oversold. Maybe consider what's going on right now that you might want to consider taking whatever profits you have. So you got warned twice, and then look what happened. You get this engulfing candle happening after that, and then certainly that would have wiped out a lot of the gains that you would have experienced. So if you want to see more about that and hear more commentary, check that out. Using that live stream, I have that link for you. Mind you, the Bollinger Bands we also use too. I can put those up there as well. Starts to get a little bit noisy. Let me show you about a trade that I made earlier in the day today that also worked out very favorably for me. And we're going to need, actually we'll need those indicators back just for a moment here. So this is my first time checking out Stock Moe's method, and it worked out very well for me. Now, that moment that I stepped into it, I believe, and I have to go back and check the timestamps on this one, but I believe that it was this candle where this green line crossed down over the yellow, but it was while it was forming. I was way too early, and because I was early, look what happened, that we didn't get a drop like I was playing on. Instead, it wasn't all the way until here, minutes later, almost 10 minutes later, that we finally got that confirmation. And that, with the way I was playing it, with the put options that I was using, that was detrimental. Like, I almost got stopped out of this thing. I was almost back out just as soon as I got in, within that 10 minutes time. And then right around that time, as I was seeing that, I'm like, okay, well, if we start pushing up farther over here, then possibly I'll consider taking it. And then we finally got this drop coming in, and the RSI really pushing us down. And somewhere between these two candles is where I took that profit. And it took me like 22 minutes for 51% upside. So that was incredible, and it was a good thing. I was right for the wrong reasons, but I was close on those reasons. The next time I'll do a whole lot better. It was my first time using that trade style that I saw from Stock Moe. So shout out to Stock Moe for that one. So that one, intraday, 51%, and it took me 22 minutes to make 51% on my money, and I'll take that all day, every day if I can. Not every time is going to be a winner. Some of them are going to be bigger, some of them are going to be smaller, and some are just going to be losses. It's just the way it goes. And now, mind you, it's about winning more than you lose, not only percentage-wise, but also just in dollar terms. You want to be making sure that those gains that you're making outweigh the losses. If not, you might want to go back and retest your strategy and see how it's working out for you. So that's what we had for the Qs. And looking forward to tomorrow. Let's actually go back out to the day part of this so we can give some commentary. Looking forward from here. So we're looking back at the daily chart, take down the EMAs, look at this. And then the RSI is actually showing us. That's actually a really good view right there as you look at this. We have just barely broken up above this previous high point that we have right here. Our lows are actually pretty even, so not total confirmation that we're going to see upward movement. As a matter of fact, on this one, the fact that we closed around 358, that resistance that we're looking at, as a matter of fact, that was something I looked at, is at 360, and we kind of shied away from that a little bit, just like we did shy away from 430 a little bit. So I mean, that's a significant gain considering the fact that it goes against the downward trend that we're currently on. Not as good as some of these others that we saw, but being after the big sell-off, we got that pop. Maybe tomorrow gives us a little bit more. We're going to have to see. Maybe we break 360, and then we have room from there up to about 364, then 368, and then up to 372. I have lots of videos now that go back and talk about those levels, so make sure that you check those out. So I'm going to get into the stocks that I talked about today, and I have another trade that I made that I want to tell you about, and I'll tell you about that in just a second. Right here is the Moomoo app where you get up to 16 free stocks using my link down in the description. The deposit levels and the free stocks that go with them are right here on your screen. Each stock is valued up to $2,000 a piece. The $5,000 deposit level gets you a free share of Tesla or Google. My Patreon, where I post my buys and sells and also my stock analyses, is over there. And additionally to that, I also have my options course available. 9 videos out so far for it, which covers the basics of options, the ins and outs of them. And then we really start to get more into the applications and then into the advanced options trading strategies in future courses that are yet to come out, but I can't wait to put those out for you. So let's go back to the charts and let's recap some of the companies that I had talked about this morning and talk about what exactly happened with them and see if there's anything left there. So here we're looking at the Qs. Let's switch over to Capital One Financial. COF is that ticker symbol. And we didn't quite get there to the fact where we had an engulfing candle coming up off of this. Not too bad. The RSI popping back up above 30. And I did take a call option position on this one. I'd have to look and see. I believe it was a $100 strike, and I think the expiration date was on October the 20th. Now, mind you, that does put us right at resistance. I gave it a little bit more time to kind of mature and work itself out. There is a risk here for Capital One Financial that if there's a lot of credit card defaults, then they suffer. But in the near term, I don't think that that's something they're going to suffer. And something I mentioned in the live stream with Stock Moe, but I did not mention in my earlier video. I forgot to mention it. Afterwards, I was like, oh man, I forgot to put that in. Well, here it is. This head and shoulders pattern that we have, the fact that it slants this way, that could be a sign of a bullish reversal for us. So I think that call option that I put out for a $100 strike on 1020 is going to pay off handsomely. we'll look and see if it falls down through this line. If we break this support, which is historically supportive as well, not just by this diagonal that we have here, we do have room. We have a significant amount of room that we could come down from that. We can come down to 95 or even $90 per share. So that would be not so good for my call option. So maybe wait a little bit more for confirmation, not financial advice, do your own research, but absolutely at least have this on your watch list. Watching is free. So let's move on from there. The next one that I have for you is Netflix. And this one is also interesting when you look at its chart from today, because it actually did drop down through this line that I have in this broadening wedge pattern, and it almost perfectly smooched that 200-day at $370 per share. Now, this is another stock that can end up bullish, and it can push us back up toward that $400 mark. So $397 to $400 is where we could see, and that's significantly up from where we're at right now. And I think that this is absolutely, if you don't already have it on your list for a stock to watch for a bullish reversal, this is one to watch out for. The RSI does not on a daily basis suggest that we're going to recover. It is still, even though it's in the oversold territory as per the RSI 12 that I have up here, we don't have signs for a momentum reversal yet. And even if we did, and now mind you, we even have the 50-day curving down towards the 200-day. If we get that cross, that's a death cross, and we get a further sell-off, and you can kiss any bullish nature of that goodbye for at least a little while. So be on the lookout for that. It is something that you want to keep on your watch list from there. So even if we put in up the EMAs, for example, on this one, you can see the way we're staying down below that 5-period EMA that we have up here. We're down below the 50, down below 13. All of those are bearish signs, but we are squeezing down on this support, and we are also squeezing down on this horizontal support level at about 370, 371, plus the 200-day. There's a lot of support that's going on, a lot of confluence, and I think that we could catch that bounce, and I think that bounce could be significant up to 400. Not saying it to convince you. Try and break that. Try and take whatever I said and try and find the ways to refute it and, balance the two things out and see if there's anything there for you. That's exactly what you're doing when you're doing your due diligence. So let's go to Microsoft. Here we got Microsoft, and this one, sort of a descending wedge. Now, there's actually two things that would make this a lot better. First of all, I'd like this to be a little bit steeper down for a bullish reversal. The second thing is it's not at the bottom, it's at the top. So this is one that I do think we could still pop out the top if earnings for big tech, for example, are something that end up being very good. We are beneath the 50-day, that's bearish. We're above the 200-day, that's bullish. We do have lower highs, we do have lower lows. So there's more than a little bit here that we're contending with when we look at this, when we talk about Microsoft. As a matter of fact, we can probably draw that even right there and maybe even bring it down a little bit. We'll leave that where that's at, move that way. Just some fine adjustments here. I got old eyeballs as I'm working with this. My glasses are really trying to pay for themselves here. So watch for this to travel back up to the top part of that trend line. Watch out for that 50-day coming down. If we break down through the bottom of this, then you have that 200-day as that next area of support that we're looking at for Microsoft. So the other thing is I said that we'd take a look at trading economics, give just a little bit of commentary there because it really does impact what we have for tomorrow. So I hope you didn't leave the video, and people who left early are going to miss this. And I really do think that it's highly important that we see it prior to wrapping up anything from this video. So today, what did we get from that? Let me refresh this page so we're looking at the newest numbers for this. When we go back, there we go. So now we're looking at Thursday. GDP, the growth rate came in at consensus at forecast at 2.1. Good. GDP price index came in a little bit soft. That's also kind of good when we look at that. So prices, we have a little bit of softening come in there. Good. Jobless claims, not really great for us. Still in the low 200,000, but pretty close to what we expected there. Still a very tight labor market. The Fed wants to see that soften, unfortunately. So that was sort of a negative catalyst for us, but not enough downward pressure to keep us from having a nice green candlestick day today. So let's move on from there down to, where did I want to say it? Corporate profits. Also down, so a little bit of softening in the economy, which is going to be a good sign for the Fed. We want to watch that. Real consumer spending quarter over quarter, half of what it was expected to be and well down from what we had before. That added upward pressure to the markets when we see that happening. Pending home sales, the fact that they're retreating finally, also a good sign. There's a lot of good reasons here why we have levity, I should say, in the markets, why we didn't have a lot of downward pressure going on to hold this thing down. And then there's also some Fed speeches. Now, what I just zoomed in on here, PCE tomorrow, 8:30 a.m. And these red labels couldn't be more appropriate as we look at this. Also personal spending and personal income. So for core PCE coming in at or below consensus, more upward pressure. Coming in at 0.3 or above, 0.3 is going to be okay-ish. 0.4 and above, that's really where you're going to start to get into some dicey territory with those core numbers. When we look at personal spending, it was 0.8 previously, coming in below consensus of 0.4, or even below this forecast of 0.6. Coming at them is going to be okay. Again, coming in below them is going to be even better to see that personal spending come down, not to the point where we see recessionary signs, but enough where the Fed is like, okay, things are slowing down enough, we probably shouldn't hike rates anymore. We're good here. And then also destroying that higher for longer, that 5.1% terminal rate that they say for the end of 2024, which I don't believe for a second, by the way. I don't think that we make it all the way through this election cycle in 2024 and still have the federal funds rate that high. Somebody has to look like the hero, and I'm not here to pick sides. I don't care. Republican, Democrat, whatever, somebody will want to swoop in, look like the hero in pushing down that number. And like I said, I don't think that 5.1% federal funds rate survives that long. And I don't even know if the economy holds out that long under what we have, not only with the federal funds rate and how expensive it is to borrow money, but also the ability to borrow money through the credit tightening. So that's a lot of what I have to say. For right now, I think a lot of it contributes to the near-term weakness that we see. But when we start to see signs that we're on the way back up with this again, that, my friends, that is going to be an incredible time in the markets as well. Over at my channel, work on the way down, making profits, and when it's ready to swing back upwards, we're going to make money on the way back up, and I'm doing everything I can to ensure that that happens. Even though there's no guarantee of profit, I can tell you we are doing quite well over the past several weeks as I've really doubled down my efforts to make sure that I'm returning as much as possible to my community that I have through the offerings that I have, through the services and products that I provide. So let's move on from there. So PCE, looking at it for the year, again, we want soft numbers coming in here. We don't want negative numbers, but the lower they are, the better they're going to be. So keep that in mind as we look at those numbers. We also get final numbers on Michigan consumer sentiment, but they shouldn't change too much. So let me bring this down and let me wrap up this video. The markets, keep watching them. I do think that there's still room to bounce up from here. It might not happen in a day. It might happen over a week or 2 weeks, and then we start to see that next leg down. Maybe we see that next leg down happening pretty rapidly. The inflation report is one of those big enough things that if it comes in way hotter than expected, that's one of those things that can do that. I did take a call option position on TQQ, QQQ, it's T and 3 Qs. I did take a call option position on that today to hedge some of my puts for tomorrow. So we'll see if we get one more day of levity coming in the markets, and then I will have them closed out tomorrow, guaranteed, because they're short term and I don't want to eat the weekend time decay on that. So whether it's a win or a loss, either way, I am out of those. Hopefully for a profit. We'll see what happens. It's a little bit early as per the momentum indicator when we look at it. And if you want to see more of my buys and sells, you want to see how I'm navigating this market, how I'm working to profit from it, all the different services, products that I bring to my community, my options course that's over there. Find the link for the Patreon down in the description of this video. Also, watch that live stream between me and Stock Moe. If you haven't, there's tons of good information there, including a live trade that he put out right in front of everybody's eyes, and we tracked it all along, gave commentary, technical analyses, and you can see just how accurately they play out and decide for yourselves. Don't forget about your free stocks from Moo. Thank you for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.